Welcome to the High Value Sales Show of Eversprint.com. I'm Malcolm Louie, the managing member of Eversprint, and today we're speaking with Jay Mason, the founder and owner of Dealer Spike, a worldwide digital advertising company focused on helping dealers in 8 specific verticals increase sales, service profitability through online digital advertising and training. Welcome to the call, Jay.
Thank you.
Jay, 2 questions for you to start. 1, can you share which of the 8, what your 8 specific verticals are in that your digital agency specializes in?
Yeah, sure. We specialize in power sports, RV, marine, heavy truck, heavy equipment, agriculture, pre-owned automotive, and new car franchise automotive.
Now, how did you choose these specific niches to help out of all the ones out there?
Well, I started my career in the automotive sector and in the 1990s, and was doing sales in that sector and grew my career there. Became vice president of a company called BZ Results, and in 2006 we sold that company to CDK Global, formerly ADP. At that time, I knew I wanted to go out and start a new business, and so I formed Dealer Spike, and it took me 2 years to start architecting the technology to do that, and then in 2008 we launched the company. And at the time I wasn't able to compete in automotive due to the sale, but I grew up riding motorcycles, ATVs, boating, camping and RVing, and I said, what we did over here in automotive I can do in this segment, and I'm really passionate about all of these things, and so we kicked it off in the power sports segment and started selling our technology to Harley-Davidson dealers, and eventually grew that to more than 3,000 dealers, and today more than 10,000 dealers around the globe.
Wow, fantastic. Now for Dealer Spike, you grew your company's revenue from $7.4 million in 2014 to $25.6 million in 2017, a 248% increase, and now you're on track to hit just under $100 million in 2018. What were the 3 biggest drivers? What were the 3 biggest drivers that allowed you to achieve the sales growth over the past 4 years?
So the past 4 years, we continued to increase our sales organization. We have a great VP of sales that leads the charge, and we continued to hire a lot of salespeople over that year. Today we have, almost 100 salespeople, and that are selling our products in each of the different verticals. And we also, in 2016, we partnered with a private equity firm, and to help grow the business to the next level and help make acquisitions. So they became a partner in 2016, and that enabled us to continue to grow and take the business to the next level.
Can you give some details as to how you grew your business from $26 million in 2017 to just under $100 million in 2018?
Yeah, we did it through acquisition, merging with our competitors, as well as continue to add new product lines to sell to our existing customer base. So it was a variety of, acquiring new businesses, but also layering what we would call layered applications and selling new products to our existing customer base.
So to recap, would you say that the 3 biggest drivers of your growth from 2014 to today were due to your fantastic VP of sales and your sales team, the capital that was provided by the private equity firm, and then subsequently the acquisitions that you've been able to make since then? Would those be the 3 biggest drivers?
Yep.
Great. Can we talk a little bit more about each of the 3? So for people and sales, what was the biggest challenge in terms of building up that team and having them be effective in onboarding new dealers?
Yeah, so for our business, the majority of our sales team is an inside sales force. We operate in a volume capacity, so we don't sign big deals. We sign a lot of small deals that turn into big deals. And I think one of the key things for us was starting with our core product and building a great relationship and serving our customers and doing everything we can to make sure that they're raving fans of our business, and then later go back and sell them our other applications that might be, thousands of dollars more per month. But we're all about creating great, deep relationships with our customers, and our salespeople know that our first responsibility is to, introduce them to the DealerSpike family, build a relationship with them, and then eventually they'll love us and we'll be able to sell our other products to them and build a great, long-lasting relationship with them.
So how small do you typically start when the salespeople start working with a dealer, and how big can it get?
So for a small dealer, maybe they'll only spend, a few $100s per month with us. But, a large dealer group might spend millions of dollars a year with us. It just depends on each size of the dealership. So, dealerships in a major metropolitan area are going to spend more because they're spending more in advertising, they're spending more in marketing, they're spending more in technology tools to make their businesses more effective and efficient. In the rural markets, they're spending less. But because we provide all of these data tools and we build web solutions for them, just about every dealer in America has to have a website.
Right.
And we aggregate this data and populate it. So whether you're in a rural market or a metro market, you need a website, and that's kind of our core base product that we work with, and we have relationships with thousands of OEMs around the world.
Right. So how do you make money on a small dealer who's only paying you a few $100 a month?
That's a great question. We make money because we build the product once and we are able to duplicate it, but with a dramatic custom look and feel. And, we kind of have this secret sauce that, enables us to do it. We don't like to give everybody all the details on how that happens, but we've been able to, make a very good living. We have over 1,300 employees today. And,
right.
Our tools are built to recreate and build our products very quickly and get them pushed out to dealers. But each dealer has their own custom look and feel for their web solution.
Right. I imagine the back end might be very similar since each dealer is carrying very similar parts and vehicles and products, right?
Yeah. Yeah. So we have a CMS, that is the same across the platform, but the front end, what the consumer sees and the dealer sees, is very customized for them and
right.
very, different. Right. So not every site looks the same.
Nice. So no one's going to be thinking that it's like the same site for the same dealer, just have a different logo.
No.
Way beyond that.
Yeah.
Great.
Yep.
Fantastic.
It's all customized.
Now, does their sales team have a hard time approaching dealers and offering the services, or does it other way around? The dealers come to you for the most part now?
It's a combination of both. We have a great reputation in the industry. We have a really high retention rate with our dealers. The dealers that choose to partner with us stay with us for a long, long time. The average dealer stays with us for more than 7 years. And, we really are all about how do we serve our dealers. It's not about all but what we do, but it's all about how we can help them grow their business. We know if we can make a difference in their business and in their lives, then we're going to be taken care of too. And so everything we do is all about, giving our dealers the best customer service, the best support, and the best tools in the industry.
Now, in terms of the PE firm, back in 2016, they made an investment in DealerSpike. What made you believe that you needed the additional capital, and why did you opt to go the PE route as opposed to other ways of raising funds?
Yeah, so good question. Part of it was just from a liquidity perspective. We sold a portion of the business to private equity, and it was primarily liquidity to me to just diversify my investment portfolio. And but with that partnership came access to a lot more deals and a lot more sophisticated financing that we couldn't have done on our own. These billion-dollar funds, private equity funds that they raise, give them access to a lot of cheap capital and great leverages with the bank. And so we were able to leverage those that partnership to continue to expand and grow our business. But primarily it was for just liquidity and to take, as you would say, chips off the table.
Sure. Now, if you had not gone that route, if you had not invested in or have not allowed the PE firm to buy a piece of the equity from you, how do you think your growth profile would have been different? I mean, you wouldn't be at 100 million today, right?
The nice thing is the private equity firm didn't put anything in the business. What they taught us is how we can leverage successful businesses and their EBITDA margins to, put debt on and acquire companies. And so the first, the last fund, invested in our business, but it was just to me to take chips off the table. Mm-hmm. And they never actually had to put money into the business. We had, we were profitable at the time, very profitable, and we were able to use our profitability to acquire our first company and then continue to move on and look at other deals. And then, strategic partnerships came together where we're able to merge together and grow the business again to the next level. So, and today, we're always looking at, a variety of deals. But in today's markets, if a business is doing well and it has, enough profit, a lot of times you can leverage that profit to put together a great financing deal to do a buyout or acquire another company.
Mm-hmm. Can you talk
in addition with your profits?
Right. Can you talk a little bit about the acquisitions you did that took you from 26 million in last year to just under 100 million this year?
I can't get into all of them because they're not all ones that we want to disclose.
Okay.
But we've been able to acquire best companies and put them together. We've been able to reduce some of the expenses that find some economies of scale through bringing these companies together, and then divesting in certain product lines that maybe weren't as efficient to take on these new products that were built more efficiently and were more profitable for us to have.
Right. Okay. So looking into the future, do you see acquisitions as to be your primary growth engine?
I think it's a combination of both. It's a combination of, making strategic acquisitions that fit our verticals and fit what we're trying to do from each of the verticals we work within, but also growing organically. We are on a combined basis selling just over 200 dealers a month on our product, and we see that there's a lot of runway to continue to grow our business, not only in North America, but globally, Europe, Asia, and continue to expand. And so we're doing that. We continue to look at companies to acquire abroad, and as well as just sell our existing tools into those foreign markets.
So you said just now that you're adding 200 new dealers a month to your platform?
Yeah.
And how many dealers out in the world that can use your platform?
Yeah, so there's over 100,000 dealers throughout North America, and so literally there's a lot of runway. Today we only have about 10,000 dealers on our system, and so there's a lot of runway. And just pre-owned, to give you an example, just in pre-owned automotive, there's about 50,000 dealers. That's just one vertical. And if you look at new car franchises, I think there's about 17,000. So you got almost 77,000 in just two of our verticals, and then you get into boat dealers and power sports dealers and marine. And so there's a lot of runway. We haven't even scratched the surface. So our business has a lot of runway. We will grow to be valued at more than $1 billion with no problem.
Wow, fantastic. So when you say value at $1 billion, is that on a you're talking about like on a private earnings multiple when you came up with that number?
Yeah.
Okay.
Yeah, of course.
Okay. Wow, that's a nice round number.
Yeah.
So what do you think would be?
And it can grow beyond. I mean, there's a lot more different acquisitions. We don't have to stay in just, digital marketing. There's all these different profit centers within dealerships that we can play in. So, there's service, there's sales, there's parts and accessories, financing. And so as you look at that, there's a variety of different tools and products and companies that we can acquire in all of these different profit centers for dealerships. So,
can you just give an example of what you mean by that? Because I know you're in the digital marketing space now. How would you potentially, as hypothetically, go into a real world profit center?
You could, look at, accounting and finance and providing the software and technology for accounting and software, service and parts software, parts and accessory software, all of these different verticals, all these different profit centers within the dealership. So I think there's a lot of ways to go about it. And if you look at, like the Cox family, who owns, Auto Trader and the auction houses and all of these different platforms. They're a multi-billion-dollar business. I think they're valued at more than 13 or 14 billion. So there's a lot of different areas that we can attack in our markets.
Right,
and that's just domestically.
Right. So you'll be leveraging essentially the relationships you already have with the dealer and just expanding your service offerings with them beyond marketing and advertising.
Yes, of course.
That's fantastic. What do you see as your biggest challenge to get from where you are today to that $1 billion valuation level?
Well, I think there's going to be several challenges in the future. Is the economy going to slow down? Are we going to be able to hire and continue to hire and recruit the right sales team to continue to grow those things? Are we going to be able to make acquisitions that make sense to get there? Because it all can't come from organic growth. It has to come from a combination. But I think we have a lot of good opportunity ahead of us to do that and accomplish it and grow well past $1 billion.
Mm-hmm. Now, when you talked earlier about growing your sales organically, do you see that just by hiring more salespeople to drive that growth, or are there other ways of increasing?
Yeah, it's both. It's continuing to grow our sales force because we still have a lot of runway to grow, not only domestically but growing our sales force internationally, selling our products there, as well as layered applications, additional products that we will either build or buy. And I think, depending on how fast you get there, we have to make a determination. Is this something that we can build internally in a quick time frame, or do we need to buy it and then integrate it? And so you always ask the question, is this a build or buy scenario? Sometimes it's build and sometimes it's buy. And you have to take those, one off at a time and make a decision on each of them.
Right. So when it comes to building your sales team, is it easy or difficult?
Well, I come from a sales background, and so I think it's easy. The main thing that companies do is they make a lot of mistakes by messing with their salespeople's compensation. I think it's one of the fundamental issues. They always try and change it every year, change the quotas, change the sales compensation, change all of these things. And what we found is the most strategic companies don't try and change their sales strategies. They don't try and mess with their salespeople's head. They don't try and, come up with a new compensation program. And they don't try and take advantage of their salespeople. I think those are the fundamental mistakes most companies make. And, coming from sales, I always want to treat our salespeople right. I want to put a compensation program in front of them that they can make a great living for them and their families, and they can acquire and find their dreams, and then stuff that makes sense so that we can be profitable as a business as well. It's not always about the business. It's mostly about the people and how do we support our salespeople. And so we're really diligent in doing that and making sure that our salespeople are involved in the products that we're building and we're acquiring because they have the voice of the dealer. They're the ones speaking to the dealers day in and day out. And so we want to build products that they know are in demand, and we want to buy products that we know that are going to be in demand to continue to grow and help them, enable them to grow our business.
Right. So what are you doing marketing-wise to generate the leads and prospects for your sales team?
We spent a lot of money on trade shows. We do, 50 to 60 trade shows a year in all the various verticals. But mostly, we do a little bit of advertising. We do a lot of press releases. But I would say every time we look at what we could spend in marketing, we say, how many more salespeople can we spend calling these dealers and building a relationship with them? And so we're a big proponent of putting more salespeople on the phones, putting them out on the street, versus spending a lot of money on marketing and advertising. We believe our people can sell it better than waiting for someone to turn to it in a magazine or looking for it in an email or waiting to see an ad on whatever trade journal. Not that we don't do that. We do all of them, but not as much as we value what our salespeople can do for us.
Right. So are your salespeople just cold calling the dealers out there and starting a relationship?
Yeah, there's a lot of cold calling that takes place, but a lot of inbound traffic through our marketing efforts and through our trade show as well.
So when you say inbound, like you're not doing advertising, right? But you're doing trade shows. But then the trade shows are kind of limited by the number of people you see at the trade show, right?
We do advertising. So we do advertise in all the trade journals, and we do remarketing and digital marketing. But I would say that's not where we're that might be 10% of what we're doing, not, where the other 90% is in salespeople.
Okay. Yeah, it's interesting.
This is a smile and dial business. So.
Okay. No, it's interesting. You're the first company I've interviewed so far where it's where so much emphasis is on the sales and not as much so on the marketing to bring the leads to the salespeople.
Yep.
Have you experimented?
Different strategies.
Yeah, different strategies. Every business is different. Have you experimented with means of generating leads for your salespeople so they can convert more sales more rapidly as opposed to, smiling and dialing?
Yeah, we definitely have. We've definitely leveraged, and we've just never seen the results. We have a great brand in the market. We have a great reputation. We have very little churn in our business, and so we think our strategy is working well. Obviously, the numbers speak for themselves, and we're very pleased with the direction that the business is heading.
What do you see are the trends that are unfolding in the market? The ones that, one, you can capitalize on, and two, that you would want to get out of the way so that they don't hurt you?
Well, I think there's always the worry that, we've had a strong economy for the last, several years, and, we may be at the end of a bull run, and so we have to be cautious of that. But at the end of the day, we're really bullish that, all dealers are going to need a website. They're all going to need digital marketing tools. And so we grew through 2008, 2009, 2010. And we really believe that we'll be able to grow through the next downturn. Not that it's going to be perfect. I think the other thing that can hurt us is, increased interest rates. So, we see what the Fed does. All of those things can have an impact on our dealers. And so as interest rates go, the cost to buy a new motorcycle or used boat or an RV or heavy truck, heavy equipment, agriculture, tractor or whatever it is, those may slow sales, which may have an impact on dealers. But ultimately, we grew through the last downturn. We saw a lot of dealers go out of business, and I think we have the strong ones that are here to stay. And so we feel real comfortable about the future. And again, we are also, moving to become a more global company, so we're not so stuck in what's happening directly in the U.S.
Yep.
And for us, as we look at our business, we have customers in Mexico and Canada. When you look at the dollar, the strength of the dollar against the peso, it's strong. It's 20 to 1. When you look at what's happening in Canada, it's weak. The Canadian dollar is 30% weaker than the U.S. dollar. And as we continue expanding, you look at, the pound and the euro, our business is more global. So what's happening in other countries, whether good or bad, is offsetting problems for us in other countries and vice versa. And so our business isn't so stuck in what's happening in just the U.S. And so I think that's a good thing for our business long term.
Oh, yeah, definitely. So in terms of marketing, what marketing channels, other than trade shows, which of the advertising channels do you like that you're happy with? I know you said you do trade journals, you've done some remarketing. How about pay-per-click ads? Have you ever mucked around with that?
Yeah, we do paper. Yeah, of course, we're heavy in pay-per-click and Facebook and Instagram and all of the major, social media platforms. But again, waiting for someone, we're a proactive company. We never want to sit back and wait for someone to call us. We want to get out there. We want to be on the offensive and getting out there and getting our name in front of dealers. I could wait and have, 1,000 clicks, but today, we're making, probably, I don't know, we're making about 3,200 calls a day, at least. So 32 to 6,000 calls a day. So that, to me, is more powerful than waiting for someone to click, and maybe submit a form or maybe or pick up the phone and call us. I'd rather be out in the offensive. I would rather be having our people talk about our brand and why we're helping dealers become the most successful dealers in the nation, and why we're helping them accelerate results, and why we're helping them find a 30% increase over their competition. So
right. When you say 3,200 to 6,000 calls a day, how many people are doing that?
Well, I think, we have just under 100 sales reps. And so, they're on the phones all day. Some are doing more, some are doing less. Okay. Depends on how many demos they have. But, I would say on the worst case, we're doing 3,200 calls a day. In the best case, we're doing 6,500 calls a day. And it's a good place to be. Okay. We're talking to pretty much every dealer in America and abroad, every month. Right.
When you say calls, you're talking about conversations. You're not talking about dials that end up in voicemail or don't get through.
Yeah, I would say I would say it's dials, it's voicemails, it's emails, it's conversations. It's a combination of all. Yeah, I'm happy leaving a voicemail. I prefer voicemail over waiting for someone to find my ad.
Yeah. Okay, good. Your sales team must have some fantastic voicemail scripts then.
Yeah, I think they're good.
Yeah. All right. Two final questions for you, Jay. Who are your ideal dealers, and what's the best way for them to reach you?
Our ideal dealers are dealers that are progressive, that they're thinking about, knowing that they have to be online to be relevant today, to be in front of their customers. And our ideal dealers are dealers that are progressive, that are looking at new ways to market. And the best way for them to reach us is to pick up the phone and call us, or get online and submit a virtual presentation request on our website at dealerspike.com.
All right, fantastic. Thanks, Jay, for sharing how you grew your company's sales so fast.
Yep, no problem. Anytime.
We've been speaking with Jay Mason, the founder and owner of DealerSpike, about his company's rapid growth. For interviews with other fast-growing, high-value sales companies, or to learn how we can accelerate your firm's high-value sales through automation, visit eversprint.com.